Hi everyone, welcome back to Be Rich. As promised, voila! I have Shasha with me. I'm sure a lot of you are very excited. It's going to be a video of substance and of actual information, not me blithering away as usual. So Shasha, what do you have for us today without wasting much time?
Yeah. The economist Larry Summers has given a very nice interview with the Financial Times. And I like reading this thing called Unhedged, the newsletter by Financial Times. It's got some great insights, and they have a nice podcast, which I think is free.
Yes.
So that's a podcast if those of you are interested in world economics and what's happening globally. I think that's a podcast it's worth listening to. And even if you're just interested in the narrow scope of India, which is maybe not so narrow, but if you're interested in only in India, you still have a lot of value from gleaming the information from that podcast. So I'd suggest you go listen to it. It's called Unhedged. Right. Now that we've covered that, it's quite interesting though. Doesn't say something which is extremely new or something you might have not known before, but it pieces together a lot of pieces of this puzzle which we're currently witnessing with the US decreasing interest rates now, and the Fed finally signaling a dovish stance compared to the hawkish stance they've been embodying for the past year and a half. So, what's happening around the world? That's the question. And Larry Summers has an answer for us. So, Larry Summers says that, first of all, he admits that I don't know what's going on, but I can give you a good guess as to what are the possibilities, the realm of possibilities in the cards for the US and the rest of the world. Larry Summers talks about how people celebrating that there's been a soft landing are basically counting their chickens before the eggs hatch, as
True.
the saying goes.
Yes.
It's not very certain that there is a soft landing. Inflation has definitely come down, and things are looking a little better for the Federal Reserve. However, the battle's not over yet. And as soon as you have a dovish stance indicated, you can see a market rebound, which it did happen. And you see even the Indian market, which has gone up after this news of interest rates being cut. So, that being said, things are looking a little better for those who have money invested in stocks. And Larry Summers, however, says that don't cheer on so fast. Things may not be as good as it seems. And as soon as such an information has been put out, you'll see inflation rates climb back up. It's a possibility. And Larry Summers, on the other hand, also says that inflation is not entrenched to a large extent, because we see that as soon as the Fed's 1 year fight on inflation began, we saw inflation slowly come down. And however, Larry Summers also said that the 4% decrease in inflation is the easy part. The remaining 2% is what's going to be tough to crack.
True.
And that's what we're seeing. We've cut across the fluff. What's remaining is the really tough part, where if it decreases beyond the 2%, then we'll know that inflation is not entrenched. So that's where it stands in the US. And Larry Summers basically goes on to say that when asked about how the Federal Reserve stance has been over the past year, he says that Federal Reserve has definitely done a good job in terms of immediately hiking rates and not dragging their foot on it. However, he says that maybe being so clear and transparent, on the contrary, is not such a good decision by the Fed. He says that there needs to be an air of mystery, there needs to be an air of uncertainty associated with the Fed. You can't become too predictable as a regulator. Because the problem of becoming too predictable is that once you do a certain action, let's say I'm the Federal Reserve governor and I reduce interest rates. Now, I'm telling you that I will, as soon as this metric goes below, let's say 2% of inflation rate goes below 2%, I'm going to cut rates. I give you a clear prediction. Now you know what to expect. And as soon as a certain number is reached, a counterintuitive effect takes place. And Larry Summers basically talks about how this may work against the Fed, the transparency. You always want people not to be able to predict what you're going to do, in the sense that they need to have a general idea, but you shouldn't be so transparent where they have pinpoint ideas of how you're going to move. Because a lot of people did predict interest rates being cut this year. And it's sort of come true, where the Fed has finally shifted from a hawkish to a dovish stance. And Larry Summers says that more of a Paul Volcker kind of situation might have been a little better for how the Fed went on acting. And that's something which he talks about. And then the second part of this interview talks about monetary theories, and it talks about the idea of the Phillips curve. And the Phillips curve, for those of you who are not aware of it, is basically the idea that with inflation rates climbing, your unemployment rate goes down, and your unemployment rate goes up, your inflation rate basically goes down. That's the idea of the Phillips curve. And this was brought to you by Edmund Phillips, an English economist, I'm pretty sure. But over the past few decades, this theory has been dragged through the mud because it hasn't been very apt at predicting certain events, like stagflation especially. Stagflation is when you have high inflation and low growth. So you have high unemployment and high inflation. And that's happened multiple times in the past. So the fear with cutting inflation rates through by increasing interest rates is that unemployment rates will go up and there'll be recession. However, Larry Summers says, maybe don't be so sure about that. We don't exactly know how the market is going to react. The economy is a loose collective of multiple parts, and how each of these parts react is going to be very difficult for you to figure out. And it's not something which is very easily discernible, and it can change in a matter of moments. And that being said, he says the Phillips curve does have its merits. However, we need a new theoretical model to come up with because we're operating on one which has a major flaw, which is stagflation. That's one part. And finally, when asked about technology and Biden and Trump with the 2024 elections, we see that Larry Summers says, again, you don't know much about how the market is going to react, because even those of you who think that Trump is terrible for the US, because he's a hard right capitalist corporate guy, markets might actually rally because you'll have tax cuts and basically free market policies which come about, which benefits corporate profits. So he says that don't be so sure. And he also said on the flip side, Donald Trump is also known for being ham-handed with how he talks in public media, and his policies like the China trade war, which he started randomly with basically no reason to do so. And he says you can go either way with Trump or Biden. You don't know how it's going to go. So even when someone like Mussolini was elected, the Italian stock market actually went up for quite a few periods in his election. So you really don't know. Even if you have the worst of the worst leaders, you end up having tremendous performance in the markets. And with the best of leaders, you have very terrible performance in the market. Don't predict that. And as for ChatGPT and technology, he's a ex-member of the OpenAI committee, I'm pretty sure, or was board of directors. And he basically talks about how the technology, for it to get its foot into the race, is going to take a long time. But as soon as the foot gets into the race, the rate at which it runs is going to be extremely fast. So he says that you'll end up under predicting the amount of time it will take for this technology to sort of make its entry. However, you'll end up over predicting the time it will take to actually dominate your life as it is. And he says that AI is one of those things like electrification and oil, where it took a long time for humanity to come up with it and sort of implement it. But as soon as it was implemented, the progress was extremely fast. And he says something similar with AI is what we'll end up seeing. Once AI has been completely established and entrenched and rooted in our society and our lives and our economy, we'll end up seeing that production completely orients itself towards this AI chat tool. And it's not just chat bots which AI is good for. AI has now come into professions which you wouldn't even think AI could sort of handle. Stuff like art and stuff. You'd never think that AI would be able to create something which is inherently human, which is art, because no other animal makes art per se. Humans are the only animals who do so. And AI has come in and started making art forms and basically different sorts of genres as well, which it's inventing out of all the training material you're feeding into it. So he